This is Trader Travis, and I am here with my market prediction for 2022 and beyond. But before I get to that, for those who don't know me, my name is Travis Wilkerson. I am a former U.S. investing champion, but I go by Trader Travis Online. And for the last 10 years, I've been teaching what I call my 5-year retirement plan. It's the blueprint my mentors gave me to teach me how to become financially independent in 5 to 10 years. Lots of students. As a matter of fact, I'll share a comment with one. Maybe he's achieved this, but I know at least several members have achieved financial freedom, and many have gone on to become millionaires. So I have a comment. Before I get to my market prediction, I have to give a shout out to Steven. He has probably got the comment of the year. No offense to anybody else and any other comments you left in my videos, but it was a nice comment. It was under the video here, option strategy combo. I was sharing like at least my theories to why I get high performance in 2021. It was easy because the market pretty much went up, but I still wound up beating the market. And I was just showing them how I combine different option strategies to get these returns you see right here on the screen. Now, quick admin note, before I cover Steven's comment, I'm going to be mostly off screen on this video just so I can stay focused and talk about my prediction and not worry about, how my hair looks and things like that. But anyway, let's get to it. All right, Steven here basically left a comment saying, I am really underrated in the investment community. My information has changed his life and financial status. Now, keep in mind, Steven is biased because he's one of many who's made money with what I teach. However, I've had that same comment. I'm like, man, I've been showing up for like 10 years straight, and my videos aren't as popular as some of these other scammy people. So I don't know why I'm underrated, but you know what? First, thank you, Steven, for this kind comment. I really appreciate it. And I was thought about it. I said, you know what, Steven, and the rest of you all watching this, do you realize you can help me with this? You can say, you know what? There's this guy named Trader Travis, pretty smart. He helps me make a lot of money. He doesn't look like the traditional finance guy. And I don't, right? Never been to Wall Street. Don't have any hedge fund buddies. Grew up American poor, using the bathroom in a 5-gallon paint bucket. My ancestors used to be slaves. And guess what? I still get pulled over and harassed cops like other people who look like me. Yeah, that had nothing to do with the stock market, but it is true. But regardless, here I am, financially independent in America. So let me share with you some of what I learned over the several decades I've been doing this, pretty much 20 plus years. And I will start with Market Club, because Market Club is a stock trading software I use that helps me get in and out of option and stock trades. They have these beautiful things called trade triangles. And if we come here to the 2-year chart and we look at the bear market of 2020, it got everybody out pretty early there before the market crashed. Even if we come right now, as of this recording, February 18th, 2022, we are in the middle of a 10% correction. Those who use Market Club are probably pretty happy because Market Club got us out of this nonsense before the market had a full correction. Even Investors Business Daily, which is another tool I have, called the market bottom somewhere around here. And I admit, I was a little torn. I've used Investors Business Daily longer than Market Club, so I got in a couple of bullish trades being greedy. When the market fell, I got right back out of them super quick. I was like, no, thank you. I am not trying to lose any more money than I've already lost. And we'll talk about why I've lost money here toward the end of this video. Travis got caught. When they say, what was Warren Buffett say? When the tide goes out, you discover who's been swimming naked. Guess what? Travis got caught swimming naked. And so I'll talk about that here a little later towards the end of this video. So anyway, Market Club still, helped us during this fake out right here and didn't give us what they would call a green weekly, letting us know the market has recovered. So we're still in bearish territory. So that's Market Club. But Market Club, if I put max, it only goes back to about 2014. So what I want to do to help you understand my market prediction is go to SPX, and I am going to put, before I put max, let me give you my market prediction pretty early on so you don't have to wade through all my rambles. I predict, and predictions are just guesses at best. They're not facts. They're not guaranteed to happen. They're just guesses. But I've been doing this several decades. So my guess is that based on what I see in the chart, and I'm going to show you what I see on the chart, my guess is that the market is going to fall another 5 to 10% or stay down where it's at for about another few weeks to a month. So out of the two things I think will happen in this year is that the market will fall another 5 to 10% from where it's at right now, or it will stay down at this price level for another about few weeks to a month before it starts going back up. So that's my prediction for 2022. My prediction for beyond 2022 is probably, I don't know when, I don't know. This is literally a rough guess. 2024 to 2026, maybe, we're going to hit another multi-year bear market, meaning that everybody's been spoiled lately, right? A multi-year bear market, it means the market will fall and keep falling every single month for about 18 months straight, right? Basically, the down period lasts a very long time, but only those of us who have been active investors for a very long time have gone through that. We've been scarred by that. We've never forgotten that. Everybody that started investing, at least in the last 10 years, have been completely spoiled, and they're about to lose a lot of money when that happens. And I'm almost 99% positive it is definitely going to happen. As a matter of fact, this 10% correction might be the beginning of a multi-year bear market. I don't think so, but it possibly could. So now let me show you where I get my guesses from. Why am I saying all this? One is based on my experience, also based on, human psychology. I study people, I coach people. People's behaviors is extremely predictable. I mean, extremely predictable. And I see this as a coach. And so I even devise my templates, the templates I teach people, I devise them based on how I know people are going to react. All right, coming back to the stock market. Basically, I want to focus on this rocket growth right here. Right? And then compare it to this rocket growth you see right here. See how that rocket growth started? In the middle of that rocket growth, you barely can see, but let me zoom in real quick. In the middle of that rocket growth, you did have a down period here in 98. Now let me zoom out again. And so that 98 time period is right here that I just showed you. So in the middle of that rocket growth, you did have some extreme down period, but then it kept going on. I am guessing we're in the middle of that same type of period. In the middle of that rocket growth, we have a down period there where there's a 20% correction. Basically, it's a short correction before the market takes off again. So that's based on history and also based on the fact that we're coming from a pandemic. People have been in a house for a year and a half. They want to go out, travel. They want to enjoy life again. So if COVID restrictions loosen up and people can get out and live again, I see an influx of people going out and spending money, and I see the second half of that rocket growth. Because you can see here, see how it starts. You can look at this rocket growth and look at this rocket growth. Don't they look somewhat the same, right? In the middle of that rocket growth, we have a down period, and that is what we may be in right here, right? Because the reason now you can see why I said I think it has 5 to 10% further to fall or stay down about a month longer, because we need that reversion to the mean. These moving averages are still a little bit too far apart. So it needs to fall a little bit more or stay down for a longer period of time to get the moving averages a little closer to each other like this. But I feel like we're in the middle of that rocket growth. After that rocket growth, where it's going to take off again. And then again, real estate prices are also taking off right now. So if we have a real estate crisis or a real estate bubble at the same time as we have a stock market bubble, that's when we'll have those huge 40, 50% declines, So that's what I'm expecting. I don't know when, maybe 20, 25, 26. It doesn't matter. All I know is that, again, people who've just traded the last maybe 10 years since 2009, right? The bottom of the bear market, all you've experienced is this rocket growth you see on this chart. Moving averages, look how far apart they are. This is unsustainable. It's unnatural. It cannot continue. It has to fall, right? I just showed you that. That's what the stock market does over time. It gets people all excited, and then it's like, let me take your money away from you, right? It's such an emotional roller coaster. And towards the end of this video, I'm going to show you how I jumped off that roller coaster. I'm like, no, thank you. I don't want to ride this roller coaster anymore. I want to ride the kiddie rides. But I still want to make grown-up adult money, right? So I put myself in a position to make grown-up adult money, but I feel like I'm riding the kiddie ride at an amusement park. You will love what I'm about to show you. But again, I will share that bonus towards the end. Let's come here. I was showing you SPY. So this is Mac's monthly chart looking at S&P, SPX, S&P 500, right? it looks fairly smooth. The market goes up more than it goes down. That's a historical fact, and that's a historical fact I'm willing to bet my money on. So now I'm going to do max 1 day, right? So it's a bit different picture. It's not as smooth, right? Look at that. That same chart we just saw. Gosh, doesn't this look like a lot of zigzags there? These looks like really extreme moves here, and that's true. In the middle of it, the moves are extreme. But as I always tell people, buy and hold works. It's like the Mac Daddy, Grand Poobah, the GOAT of all investment strategies. It works beautifully. And as long as you don't do anything stupid, you can make money. But we're stupid human beings when our emotions get involved. When emotions go up, our intelligence goes down. Now, that's a perfect transition to this bonus. And I want to reveal how I stop myself from doing stupid things, right? How I put protection mechanisms in place to keep my emotions settled. How I'm going bankrupt in real estate, right? Because I over leveraged myself. I was planning on best case scenario. And every freaking tenant of mine moved out the exact same month on every single one of my units. I'm the only idiot to this day that I know that's ever happened to 7 to 10 different units, different properties. It's like all my tenants got together and said, let's screw our landlord, right? I had no savings. I had leverage everything, right? I didn't plan for worst case scenario, but hey, that's okay. That bankruptcy gave me an investing superpower. And I'm like, I'm never going bankrupt again. I'm never losing my money again. And I took that anger, I took that philosophy to the stock market, and it caused me to devise strategies you're about to see right now. So I'm going to bring this home by placing a trade right now and showing you how a person's experience and a person's philosophy can help them avoid losing money in the market. So as you can see, we are in the middle of a 10% correction. The market is actually down today. Even Market Club, negative 90 on the S&P 500, all red trade triangles. Yet Travis is about to buy stock, 100 shares. What? It's a red trade triangle. We're in a correction. What are you thinking? Chill out, Snowflake. Let me show you. So I hit confirm and send here. You see is going to cost $43,000 to buy this 100 shares of stock. So I'm going to send that off. That got filled. Now, what the heck am I thinking? I just talked about how Travis doesn't like losing money. So this is my philosophy. Going bankrupt in real estate, that fall from grace. Real estate millionaire to driving a forklift at Walmart. That fall from grace gave me an investing superpower. And it scarred me because every time now I put myself at risk, I'm always thinking about how can I protect myself from losing money. All right. So I just bought 100 shares of stock. We're in the middle of the correction. Could be a bear market. So what am I going to do? I bought the stock for $4.34. I am going to come out here. Furthest dated December expiration here, about 3 years out in time. And I'm going to buy insurance. Imagine that. Did you know there was stock insurance? To this day, it still surprises me that, all these financial planners have not insured your 401ks and RAs like this. They haven't told you that stock insurance exists. But anyway, if you know anything about options, if you don't, let me summarize it for you. When I buy this put right here, the rights of this contract is like a real estate contract, music contracts, they have certain rights. This contract gives me the right to sell 100 shares of stock at $4.35. I paid $4.34 for it. So I have the right to sell it for higher than I paid for it for the next 1,000 days. And it's going to cost me $6,100 if I pay the full net price, which I don't. So I'm going to see if the market maker works with me, fills me at $6,150 versus trying to make me pay $63. It just saves me a little bit of money. So basically, I'm going to pay $6,150 versus $6,300. So I save a little bit of money there. All right, so I'm going to send that off. So there you go. Now, what you just saw is what I've already taught everybody on YouTube for free. It's called Enhanced Buy and Hold, right? Enhanced Buy and Hold is not particularly a strategy. It's not about the rules. It's about the philosophy. How do I protect myself against losing money? You see, I buy 100 shares of stock. I get dividends. I get stocks don't expire, right? Stock market generally goes up over time. You saw it on the chart. I don't want to lose money. Well, at least I don't want to lose 50% of my account in a market crash. So I buy insurance. And remember, because I went bankrupt, it gave me an investing superpower. my alarm bells go off. It's like ding, 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 ding. I don't want to lose money, right? That's why I buy insurance. But then I'm frugal by nature. And I'm like, I like having insurance. I just don't like paying for it. So my philosophy puts my creativity to work. And I ask myself, how can I pay for this insurance? In the Enhanced Buy and Hold Blueprint I shared on YouTube for free, I showed you one way to pay for this insurance with the 3X growth strategy that's taught in Market Club Options. But see, it's not about a strategy. It's about a philosophy. So you have to ask yourself, if you have a philosophy of getting the market to pay for your insurance, can you figure out other ways to pay for that insurance? I just showed you another way. Well, I can sell a really far out of the money put, pretty much a put that's really below the market. I go out further in time. That covers my insurance costs for the year. I am good. I don't have to look at this again for the next 3 years, but I won't. I check in next year. Only 3 things can happen. The market can go up, down, or stay sideways. Going up, I'm good. I got my gain. I was protected at my purchase price. This put will expire, which means I will book all this profit. And if the market goes up, guess what I will do? I will just re-up my insurance at another higher price level and rinse and repeat. I might sell another put to pay for the insurance, or I might, pair it up with another strategy. The strategy you pair it up with doesn't matter. Your paycheck is a strategy. I just talked about it. If I still had a corporate job, I probably wouldn't be selling these puts. I just use my paycheck at my job to pay for this insurance, right? This wealth building account. But I don't. So I need to find ways to get the market to pay for the things I want. Now, let's talk about worst case scenario. The market falls to 375 and falls even further. If you're a part of my Put Ladder course that I just opened last week, for those who weren't a one-on-one client of mine, who didn't get the luxury of learning that strategy is right above here. What is a Put Ladder doing today in a down market? What is a Put Ladder doing today in a down market? It's making money. See, it's making money in a down market. And coming back here, I just adjusted some of my ladder rungs today and brought in $4,000 or $5,000. Not only am I making money in a down market, but I'm bringing in income in a down market because of a strategy. That's not the purpose of this video. I just want to tell you that because if you learn that strategy, you know about rolling options. So if the market is lower, let's say the market falls at 300 and I'm unlucky, you know anything about options, the broker's gonna be like, hey, Travis, you need to buy another 100 shares of stock. Well, in this account, unfortunately, I don't have the money. But that's where we can roll. It's a technique called rolling. I basically just roll this option out in time. I would roll it down to a lower price point, bringing in more income, thus accumulating more profit to pay for my insurance. So that's beyond the scope of this video, but I just want to show you that. This is a philosophy. This is how a person's experience. This is what happens to a person when they go through several bear markets. Like I was an active investor back through the internet bubble, and I wasn't trading options mainly. I was learning options and then trading, and then I had mutual funds, right? But I watched everything. I had options. I traded put options a lot, basically. Then in 2007, 2009, I basically sat in cash. That ruined the whole buying put options. It was just like, man, this is too much work. Market's up 200 points one day, down the next. It was just stressful. So I was like, screw it. Let me cash out and just wait this bad boy out. And so I learned about, it's good to have a good emergency fund so you can live off your savings while you wait for the market to sort itself out. But basically, the point I'm trying to get, people who've gone through the Great Depression, right? If you are a kid, if you're listening to this and you're a kid of someone who went through the Great Depression, nearly everybody I've talked to talks about how their parents, I don't like the word scar, but let's say they never forgot what the Great Depression felt like, and it altered the way they managed money for the rest of their life. So that's what happened with me when I went bankrupt in real estate. That's what happened with me trading through these multi-year bear markets. It just alters the way I manage my money. So now I manage my money based like this. I'm like, nope, I'm never going through that again where I watch 50% of my money go out the window. I'm always buying insurance. And because of my frugal nature, because of my philosophy, right, I'm like, okay, how can I pay for this? And I try to find lower risk ways to pay for my insurance. So that's it. I hope you found at least one nugget of wisdom in all of these rambles. You take care, and I'll see you in the next video. And if you're interested in Market Club options or the Put Ladder, check the links below this video.